Good morning. Today marks a historic shift in India's economic journey as the new GST rates kick in, promising cheaper prices for households and a fresh wave of consumption-led growth. Prime Minister Modi, in his Sunday evening address to the nation, called this reform a milestone for easing the burden on the middle class and boosting the economy's momentum. But as India celebrates this relief, global cues cast a contrasting shadow. The US's new H-1B visa announcements have sparked concern for IT and tech, a factor that could weigh on stock markets, even as domestic optimism rises. More on this later, but first, let's kick off with the top news at this hour. Goods and services cheaper as GST 2.0 kicks in for the middle class. That means real savings on everything from daily essentials to big-ticket buys. A landmark reform that puts more money right back into people's pockets. In the words of Prime Minister Modi, the new GST rates are expected to save consumers nearly 2.5 lakh crore rupees. Experts believe this money will flow straight back into the economy through fresh spending and investment. A massive push that could change the pace of India's growth story. But even as domestic optimism rises, global worries weigh heavy on Dalal Street. The US move on H-1B visas has rattled sentiment, with IT and tech under pressure. Investors are now nervously watching how global headwinds play out against India's reforms. There is, however, absolutely no nervousness among companies raising funds from D Street. As many as 31 IPOs to hit the market this week, more than 8,000 crore rupees to be raised. There are also 9 companies making their debut. Commerce Minister Piyush Goyal leaves for the US. Trade talks likely in Washington, D.C. tonight. Ministry statement says the delegation will take forward discussions for an early conclusion of a mutually beneficial trade agreement. The visit comes just a day after the new H-1B visa regulations came into effect. Well, the markets are likely to be anxious about the impact of Friday's announcement on H-1B visas. Donald Trump's draconian measures rattled the tech community, but the provisions were later watered down in a clarification by the White House. However, nervousness remains about the H-1B visa scheme and the hit the Indian tech sector will take from the Trump administration's plans to close the doors to Indian techies. For more on this, we're joined by Business Today TV's Karishma Asudani. Let me go straight across to her. Karishma, just take us through, minute by minute, the kind of news that came through on the H-1B front and how everyone was really shaken up, and then the clarifications that have also come in from the Trump administration.
About the last 48 hours have been nerve-wracking for India's IT industry and our workforce abroad because of the kind of announcements that have come in with the H-1B visa. What started as a death knell, I'd say, on Friday, where it was announced that there is going to be a hefty service fee that will be charged on people willing to continue with their H-1B visa, which rushed a lot of Indians who were back on their flights across various parts of the country to get back to the US before September 21st to ensure that they are within the jurisdiction, led to some kind of clarity coming in yesterday from the White House press saying that this is only applicable to the new visa applications and not to the existing or the renewal ones. Now, while that is some kind of relief, it has questioned the whole fact about something like a development like this coming in, and it brings India's IT industry on the drawing table to discuss that if this is the time for them to make a stronger decision in order to retain skill and talent in India. I was, in fact, speaking to a government official yesterday who said that, if the US has done this, let's not be surprised if the Europe also plans to do it in the future in order to protect its own domestic industry. And that puts our workforce in danger because a lot of Indians, if you know, are settled in the US on these work visas and have been contributing to the sector. The big question is this a silver lining for us to think of a long-term solution, or for us to make the stronger negotiations with the US to at least let us surpass the short-term circumstances.
Absolutely. And in fact, remember, the largest number of H-1B visas for the US are issued to India, almost 70% or so. So you can understand the kind of impact the tech industry is likely to see on this, and how much they'll actually mitigate the impact. We'll discuss that a little further on the show. But Karishma is also tracking the other big story on when it comes to the foreign policy as well. Commerce and Industry Minister Piyush Goyal has his own view on the current tariff wars. He's currently in DC for further negotiations on trade and tariffs. So let's listen in to what he had to say about the various measures just ahead of the crucial visit, and we'll also get Karishma's take on what's on the agenda.
दुनिया समझती है भारत की ताकत क्या है। ऐसे ही नहीं है कि पूरे विश्व के अलग अलग देश भारत के साथ फ्री ट्रेड एग्रीमेंट भी करना चाहते हैं, भारत से व्यापार बढ़ाना चाहते हैं, संबंध सुधारना चाहते हैं। थोड़ा बहुत हमारे टैलेंट से डरते भी हैं, उससे भी हमें आपत्ति नहीं है। हमारा टैलेंट भारत आके यहाँ इनोवेट करे, यहाँ डिजाइन करे और हमारी अर्थव्यवस्था तेजी से आगे बढ़ेगी। सो वी आर विनर्स कम व्हाट में।
All right, Karishma, just a quick look at the agenda. We'll, of course, be coming back to you through the day to get updates on what's really happening there in DC.
Well, Abha, Minister Goyal will be in Washington, and then following that, he'll also be going to the New York. And on the sidelines of the UN General Assembly, he'll be holding a meeting with the USTR representative. And all of this comes in at a very crucial time of our last week, September 16th meeting with Brendan Lynch, between Washington's Brendan Lynch and Delhi's Rajesh Agarwal, which definitely paved a positive path. This was well on expected lines, and Minister Goyal's visit only hints at the fact that we're not away from sixth round of negotiation.
We've lost Karishma's screen there. We'll come back to her shortly. But continuing to keep an eye on that big meeting for you, and we'll bring you all the updates. Now, meanwhile, we're counting down to market opening. We've got both Shailendra Bhatakar and Amrish Baliga with us this morning. Good to have you both. Let's look at the trade setup. Amrish, great chatting with you after a very long time. Let me first get your view on really how the Nifty is set up today. We've got lots of these global factors that we're tracking, and it's a little uncertain as to how they're likely to play out. What's going to be on your radar?
I think on Saturday evening, there was a huge amount of panic. But after those clarifications, after that, some sort of a U-turn which happened, it may not be that bad. But yes, the IT stocks specifically could get affected. In fact, on Saturday, I was expecting these stocks to open about 10% lower. But post those clarifications, we are clearly seeing that they're opening a tad bit lower, 3 to 4% lower. I don't see a major cut because, the issue is not immediate. I think the issue is going to happen at least over the medium term. From that point of view, I think the IT stocks may not fall too much. And markets overall have been showing resilience, and this and the amount of liquidity which has been coming in has been supporting the markets. So I don't see much of a downside as far as overall markets are concerned. Maybe we could see some correction.
All right. Shail, let me bring you in as well. Of course, lots of conversation around how IT majors will manage to mitigate these costs and plan over the next 2 to 3 years in terms of, how this will minimize the impact on their P&L. But with regards to the kind of action we saw overnight on some of those ADRs, talk us through that and what it's indicating for some of the IT majors this morning.
Abha, clearly this is a reboot for the IT that we know over the last three and a half decades. Now a lot of work will be brought to India, and that essentially means better margins. But this is a knee jerk that we will see in today's trade. Infosys already down 3.7%. If you see the ADR on Friday, it lost 3.5%. And more importantly, the volume was phenomenal. 54.7 million Infosys ADRs were traded at about $16 a pop. That makes it $1 billion worth of transaction, and that's a negative downtick. And this is the volume that we've seen highest since
Shell,
22nd
hold that
October
thought.
2019.
Hold that thought.
doubt.
I'm coming right back to you. But I just want to pull up Infosys on opening trade. Let's pull up Infi. Let's pull up Wipro. Let's pull up TCS. Remember, these are the biggest weighted stocks on the index. So if we're seeing pressure on the index, it's going to be on the back of the action here. Infi is down 3% as we just saw Shell talking about this pre-open ticks. The Nifty IT is down over 3% as well. Let's continue to pull out some of those counters, and then I will go back to Shell. Tech Mahindra actually has the largest exposure. That's why it's down almost 5%. It doesn't have too much offshore capacity there. We have had some brokerage calls come in talking about how companies will have time to plan and mitigate and offset those risks. But this is the immediate impact that we're seeing. BofA says that there is an EPS risk of 7 to 17% over 3 years coming in. We've also got highest impacted stocks like Tech Mahindra. Let's also pull up LTI Mindtree, Persistent. Take a look because some of these names will be highly impacted as well. And also pull up Infi and ADR as Infi and Wipro post all that ADR action. Infi continues to be about 3% lower as well. Down over 3% on the tech index. Shell, I'm going to come back to you on this to talk us through those numbers and volumes once again, because clearly this is where all the action is this morning.
Absolutely. 1, 2, 3, 4, 5, 6, 7, 8. Top 8 losers on NSE 500 today are tech stocks. Losses range between 2.5 to 5.6%. Abha, the knee jerk will be what we see in front of us. This will also pull down the Nifty. Look at the Nifty IT index. It's 3.5% lower. We've already lost 1,300 points because EBITDA, which is the operating profit of all these top 5 companies, TCS, Infosys, Wipro, HCL Tech and Tech Mahindra, will be down anywhere between 5 to 11% in FY26 because of higher visa costs. Next year, obviously, they will somehow absorb the impact, but the knee jerk is right there in front of us. You might see some moves coming in on the afternoon trade when people buy into deep value, but this is what is pain, and pain is visible, and Nifty will also be down because 10% of Nifty is the IT stocks. Infosys itself has a 5 percentage point weightage in Nifty, and that's the reason why you see a 100-point downtick on the Nifty. Nothing to be worried about. We've had 3 weeks of gains. This is just a bit of profit booking. Abha.
Yes, nothing to worry about, so to say, but let's focus on those tech stocks a little deeper because we haven't seen them perform this year regardless. And some of these factors continue to, really keep a dark cloud when it comes to some of those tech majors. So, Amrish, I wanted to ask you about that because, tech used to be a darling of the market, but clearly things are somewhat changing. How are you viewing tech as an integral part of someone's portfolio at the moment?
No, see, end of the day, tech has a huge sort of exposure as far as Nifty is concerned. So you can't ignore tech. But then possibly in the last couple of quarters, I would say possibly the last 7, 8 quarters, people have reduced their position in tech. And still we are not seeing that silver lining as far as the earnings are concerned. We are not seeing a decent uptick. And even the order flows. Every quarter we assume that possibly the next 2 quarters we could see that uptick, but that's not been happening. And on top of that, we have this adverse news which has come from US. So I think it'll take a while longer. So I would say that as of now, keep your tech exposure at the lowest. Maybe just about 5% of your portfolio could be in tech, which is lower than the weightage it has in the Nifty.
Okay. Well, lots of different views also coming in. That's Amrish for you on tech saying keep it to perhaps 5%. MOSL this morning also talking about how there could be perhaps a neutral EPS impact at this point of time because we're looking more towards FY27 for an impact and the situation's currently evolving. And, currently they're saying that 20% of employees are based on site, and of this 20 to 30% are on H-1B. So that's just 3 to 5% of the active workforce for a typical vendor. So they're still keeping kind of a neutral stance, but lots of different views and strategies that are emerging as everyone tries to really assess the kind of impact that this news could have, and also how this will play out, whether it be through through the courts in the US, and as companies come up with solutions to tackle it as well. But let's take a look at the larger market at this point. While of course the focus is on tech, and that's keeping pressure on the Nifty today, but what else is actually seeing some kind of action in the broader markets? Amrish, otherwise, we've had good news all around. We've had the GST reforms. We're heading into festive season. Markets have been at highs. So everyone has been fairly positive on the domestic story. How do you see things weighing up between the domestic news versus the continued uncertainty on the global front?
See, sentiment-wise, clearly there is positivity as far as the domestic consumption is concerned, because right from mid of August, when Prime Minister made that announcement of GST, we have been seeing a decent amount of interest in the consumption story. And I think that's what is going to play out now, because we are at the end of monsoons, and again, it was expected that rural demand will increase because of monsoons. Plus, we have the festive season which has started off. So I think all this is going to help, along with the major GST cuts which we have had. I think all this is going to play out on the consumption story. And like it was rightly pointed out, that about 2.5 lakh crores of savings would be there. So finally, that's going to go back into consumption. And I think that should play out at least over the next 2 quarters and should show up in the earnings of these companies.
All right. Let's take a look at Adani Power as well. Let's pull up that one for you. We've got a stock split coming in, 5:1. Remember, some of those Adani Group counters also in action late last week on the back of the SEBI clearance coming in. And Adani Power particularly seeing a lot of brokerage views looking at it positively with an eye to growth. Shell, how's it looking on the charts?
It's absolutely wonderful, Abha. Remember, it was one of our top performer stocks last week. Now this 5:1 split is effective, and post that split, the stock is up 16% because it's a little more affordable to people who want to trade. Remember, it's always been a high beta counter, and the kind of coal linkages that it has is enthusing a lot of buyers. There was a Morgan Stanley report that came in last week, and that's put an unambiguous buy on Adani Power. And the point that you mentioned, the SEBI overhang is over, the Hindenburg overhang is over, and that's the reason why you see a sharp 16% uptick on Adani Power. In fact, a lot of Adani stocks are doing well. 2 percentage point uptick on Adani Enterprises. You have Adani Total Gas 2.5% higher. And Abha, it's defense, defense, and defense all the way. A very strong move coming into shipyards, Garden Reach, Cochin, and Mazgaon. Also other PSU stocks, BDL, BEML, and BEL. So apart from the tech space, the market is showing signs of very decent recovery, including PSUs. Abha.
Right. Amrish, what about some of these themes? We have seen these recurring, whether it be PSUs, defense, and so on. Are you also eyeing some of these trends? And if so, what are your preferred stocks?
No, I think, see, we have seen a decent correction in defense over the last 1 year, 1.5 years. So, like quite a few of them have come down to decent levels where the valuations are decently attractive. And could be a good time to again start buying, because clearly there is focus on India manufacturing, and that applies majorly to defense also. So I suppose like stocks like Cochin Shipyard, Mazagon, BEL, I think these are the ones to be looked at.
Okay. Well, the stock market is also buzzing with excitement with a record 31 IPOs lined up this week. And together, these issues aim to raise about 8,310 crore rupees. And 12 main board issues, which are targeting about 7,350 crore rupees. 9 companies are also scheduled for listing this week. And the biggest IPOs are Jain Resource, that's a company involved in recycling and manufacturing non-ferrous metal products, Seshasai Tech, Trualt Bioenergy, Anand Rathi Shares and Stockbrokers, and Atlanta Electricals. The strong appetite for fresh equity, and clearly, while global jitters remain, India's IPO boom shows no signs of slowing down. And talking about IPOs, a big one last week, of course, was Urban Company, and that's already at a new high. Shell, what's happening on Urban Company this morning?
Abha 5.5% higher on Urban Company. This is the fourth most active traded counter on the NSE, and now a fresh high. Remember, the listing high was somewhere like 170, 178 on last week, and now that has been breached. So it's sky high territory. And remember, a lot of tech oriented funds will be selling their tech stocks and putting them into internet stocks. Therefore, NetWeb is up 3.6%. Look at how Swiggy and Eternal are also doing. Look at how PB Fintech, Paytm, Nazara, all these companies. So money is moving from technology service providers to product makers in the internet space. This is a longer term trend that you will see. Exit from TSPs and entry into internet stocks. Abha.
Okay, I'm just going to recap some of those views on tech. CLSA saying that it's going to have a limited impact potential, however, up to 6% hit to FY27 earnings, only if the cost is entirely borne by companies. BofA, or Bank of America, saying that there's a 7 to 17% risk there on EPS over 3 years, and companies have time to plan and offset the risk in that time. So lots of different views coming in, as we just heard from Amidst as well, saying keeping IT to, let's say, 5% of your portfolio is possibly a good solution. Amidst, just a closing comment from you before we wrap up the show. Otherwise, it looks like festive momentum is intact on Dalal Street. Are you counting down to some new highs ahead of Diwali?
Yeah, it's very much possible because the sentiment is decently positive, despite the sort of adverse news which we had in the recent past. It was just not the US H-1B visa issue. We had the Chabahar, port issue, which is hitting India directly. Pakistan and Saudi Arabia arrangement, that was also negative for India. But despite all that, we have shown resilience, and the amount of flows which have been coming in, I don't think is going to stop anytime soon. So I'll not be surprised if we see levels of Nifty closer to 26,000 over the next possibly a week or two.
Fantastic. Amidst, thanks so much for joining us. Shell, great to have your analysis as well. That's where we leave it on the show this morning. Do stay tuned for market closing later in the afternoon. Thanks for watching.